It's time now to take a look at the markets as traders were wrestling this week with conflicting signals about a potential winding down of the U.S.-Israeli campaign against Iran. And as always, we can turn to Jameel Ahmad, the chief analyst from GTC. Jameel, so oil posted its biggest one-day price increase in years following Trump's speech late on Wednesday. Traders obviously there not liking what they heard. So what happens next?
It was the biggest one-day move in 6 years. And if you look at the acceleration in the price towards the end of the week, we're still seeing higher oil prices for longer. And that's based on essentially this speech suggested that this conflict will still go on for a little while longer yet. Any hopes that it would end within a month have been completely dashed now that we're heading into the 6th week, should this still continue past this weekend. And based on some of the comments that were made, like if you want to take the oil, then just take it and so forth, it suggests that, this conflict's going to remain ongoing and there's not going to be a solution to the Strait of Hormuz anytime soon. And essentially you had the US president make the speech on April Fool's Day. And at the end of the day, anybody that hopes that there would be let's say a ceasefire or some easing of tensions following this speech was left, empty-handed. And that's where April Fool's comes into play, because investors are caught somewhat off guard by that speech because it suggested that this is going to last longer yet.
Now, Jameel, we've just concluded the first quarter of 2026, and it's been quite a roller coaster ride there. So how would you sum it up?
Well, I would sum 2025 as a roller coaster ride. There was a lot of, I would say, sensitivity across financial markets, but compared to what we've seen over the first quarter of 2026, it's been complete, I would say, chaos and somewhat chaotic, and it seems like it's going to continue. What we're seeing so far this year is that it's a very much sentiment-driven market. And by sentiment, I mean we're reacting to headlines and a lot of geopolitical uncertainty, and we're actually ignoring economic data, economic themes, what's happening with central banks and so forth, not because it doesn't matter, but because at the end of the day, all of those, the data, the themes, the central banks and so forth, are going to be reactions to what the economic fallout is from this escalating and emerging conflict. And at the moment, it's too early to tell what the damage left behind will be when it comes to economic themes and so forth. And that's why investors are just reacting to headlines. And that's also why you're seeing such moves, such as the biggest one-day increase in oil prices for 6 years and so forth, just on the uncertainty that this unfortunate situation is bringing to the investor climate.
And today also is marking Easter Friday for many markets, but we're still expecting U.S. jobs data. But the economic climate has been a bit tough, hasn't it?
And it looks like it's going to get tougher because at the moment, we're not actually watching the data that closely. Yes, the U.S. economy added somewhat more jobs than what was expected last month. But at the end of the day, should the ongoing conflicts suggest that we're going to have an economic downturn. Again, each day that passes and each week that passes, you're going to see more risk when it comes to the world economy. And that means that no matter what data's come out last month and this month, it's going to be somewhat irrelevant should this conflict not be settled down soon or not end in a resolution. Because ultimately, we're going to start to see in May and June, and we're going to start to see what impact is happening on inflation, what impact is happening on consumer confidence, what impact is having on jobs data and so forth. So at the moment, yes, the jobs data actually looks somewhat positive, but does it matter for investors? No, because the US Federal Reserve and central banks are going to lean towards increasing interest rates rather than cutting interest rates, which what was hoped for 2026, based on inflation expectations and everything has pretty much been thrown out the window because 2026 economic outlook has very much been tipped upside down from this situation in the region.
Jameel.